The benchmark stock indexes closed with minor changes yesterday. They closed mixed, and the Dow Jones printed losses. Today, investors have to digest the data on the US building permits and some remarks from Fed policymakers. The S&P 500 and the Nasdaq notched modest gains. The S&P 500 added 0.12% to close at 4,508 points. The major stock indexes traded in the green in the New York pre-market. Futures on the stock indexes inched up by 0.1 and 0.3%. As for the intraday outlook for the S&P, it's expected to trade in the corridor between 4,476 and 4,520 points. The optimistic scenario means a rise to 4,560. The pessimistic one suggests a decline to 4,467 points. Yesterday, the U.S. Labor Department reported that the initial unemployment claims grew more than expected, so investors increased their bets on the Fed completing its cycle of rate hikes. In a separate report, the Labor Department said that import prices plunged by 0.8% in October, the steepest fall in the last 7 months amid a considerable decrease in consumer prices. In turn, the annual rate of import prices extended its slide to 2%. Nevertheless, Wall Street indexes are wavering between gains and dips, as some investors want to sell on rallies while others want to buy on drops. The economic data was not dismal to rekindle recession fears. At the same time, they were not strong enough to revive a full-fledged rally. Analysts took notice of a steady growth of stocks of high-tech giants, including Microsoft, Apple, and Nvidia. Due to a 5% collapse in oil prices, the energy sector in the S&P fell by 2.1%. The telecom sector looked the fastest growth of 0.9%. The IT sector also showed strong performance. US retailers did not have a lucky day on Thursday. Walmart shares stumbled by 8.1%. Dollar General and Dollar Tree sank by 4.2% each. Target shares slipped by 0.4%. Macy's shares jumped by 5.7%, as the quarterly sales of the chain store were beyond Wall Street estimates. The stock market opened today on an optimistic note. The early rally was triggered by the fact that yields of treasuries dropped to the lowest level in 2 months, and this dynamic supported stock indexes. Yields of the 2-year treasuries fell below 4.08% on a Friday for the first time since September. Besides, yields of the benchmark 10-year treasuries also slipped below 4.40% to the lowest level of September. Stocks of most companies with a mega capitalization went up in the pre-market. Amazon shares and Nvidia shares climbed by 0.5% and 0.3% respectively. As for the economic calendar, the market got to know data on building permits on the United States. According to flash estimates, the number of building permits increased by 1.1% to 1.487 million in October. Building permits are still propped up by a permanent deficit of available homes in the market despite high borrowing costs. The market gave a muted response to the report, and traders have to digest remarks by Boston Fed President Susan Collins, San Francisco Fed President Mary Daly, and the Chicago Fed President Houston Goldsby. The macroeconomic picture remained roughly the same, so the market could hardly rely on the change in the Fed's rhetoric. The 3 major stock indexes are on a track to close the week with a 2% growth for a 3rd week in a row. A multitude of economic data, including the CPI and the PPI, indicate easing inflationary pressure. While markets have fully priced in the Fed to keep rates at the current 5.5% level at its December meeting, they also see a nearly 69% chance of a rate cut of at least 25 basis points in May 2024. The US dollar is still subject to sell-offs. Its index is trading almost flat, 104.10, and the intraday outlook for the index remains the same. It's expected to trade between 104.10 and 104.40. Alternatively, the instrument could dip to 103.80 or climb to 104.48. On a Friday, the US dollar is seen to close the week with the sharpest weekly fall against rival currencies this year. The yen asserted its strength suddenly. The dollar-yen pair traded below 150 today amid mounting concerns about grim prospects of the global economy. Softer than expected inflation data on Tuesday made traders revise the likelihood of when the US Fed will cut interest rates. Dovish expectations put pressure on the US dollar, so the greenback is expected to close the week with a 1.6% plunge, the steepest fall since mid-July. The US dollar lost 1% against the yen and was last seen at 149.60. Tepid economic data around the world raises concern about a slowdown in the global economy. However, it enables the conclusion that major central banks might proceed with a high fight against stubborn inflation, and this is bearish for the US dollar. A sharp fall in oil prices today hurt the Canadian dollar. The asset lost all its earlier gains and approached 1.38. Today, the loonie managed to regain its footing, and the USD CAD pair traded at 1.3720 or 0.27% down in the early New York session. The instrument is likely to trade in the corridor between 1.3668 and 1.3770. Oil prices tumbled to multi-month lows on Thursday in light of a new report with the evidence of waning energy demand among key consumers in Asia and North America. On Friday, both benchmark rates rebounded by almost 1%, thus supporting the Canadian dollar. Still, the loonie remains under pressure due to the empty economic calendar. Crude oil prices have slumped by nearly 25% in 6 weeks. The crypto market is enjoying the boost, trying to close in the green before the weekend, and popular digital assets went through a roller coaster this week. Nevertheless, Bitcoin found some stability today and climbed by 1.6% before the opening bell to open at $36,530. Like on Wall Street, the standoff between optimists and pessimists is in full swing. The balance of forces remains in equilibrium, so Bitcoin finds it hard to stick to a clear-cut trajectory. The flagship crypto is expected to trade in the intraday corridor between 35,800 and 36,800. If the price leaves the borders, it could either retest the level of $35,500 or grow to 37,800. You are open for any feedback. Subscribe to the channel and be aware of recent trends in the financial markets. So we wish you profitable trading and have a nice weekend, and see you online next week.